Florida real estate once looked like the ultimate beachside dream, but in 2025, the market is showing serious cracks. For years, buyers from across the US and Canada rushed to Florida, escaping high taxes, harsh winters, and soaring housing costs elsewhere. That surge in demand created one of the hottest and most overpriced housing markets in North America. Now the bubble is starting to burst. Rising interest rates, insurance nightmares, and overvalued properties are pushing many Florida housing markets toward steep price corrections. Experts warn that several cities are facing some of the sharpest declines in home values, making them risky spots for new buyers and investors. We're breaking down the 10 Florida cities where home prices are most likely to crash in 2026. These aren't small dips. They could be major declines. If you're thinking about buying a house or investing in Florida real estate this year, you need to know which markets to avoid before putting your down payment at risk. Number 1. Fort Myers. Fort Myers still bears the scars of Hurricane Ian: half-repaired roofs, boarded-up businesses, and flood-damaged neighborhoods. Yet real estate listings still ask premium prices, even as the market slides. In 2021, Fort Myers ranked among the hottest housing markets in America, with median home prices around $420,000. By mid-2025, prices have dropped to $375,000 and continue trending lower each quarter. The biggest problem is the insurance crisis. After Ian, premiums exploded. Many homeowners saw costs jump from $4,000 to $18,000 annually, with flood insurance alone reaching $7,000 per year. Citizens Property Insurance, the state's insurer of last resort, is pulling back, leaving residents with fewer options and higher bills. For many, coverage is either unaffordable or unavailable. Meanwhile, builders kept adding new homes, flooding the market with inventory just as demand collapsed. Open houses now sit empty, and buyer activity has dried up. Even rebuilt areas carry an asterisk: insurable only at sky-high rates. Fort Myers' job market doesn't help either. With low wages, seasonal employment, and retirees fleeing to cheaper inland markets, affordability is collapsing. Once seen as a Gulf Coast paradise, Fort Myers in 2025 faces rising premiums, falling prices, and a shrinking buyer pool, making it one of Florida's riskiest real estate markets. Number 2. Tampa. Tampa looks like a boomtown: gleaming new towers, cranes on the skyline, and trendy coffee shops charging $7 a cup. But beneath the surface, the Tampa housing market is flashing red. In early 2023, the median home price topped $460,000. By mid-2025, it slipped to about $425,000, and quarterly declines are accelerating. The problem is simple. Tampa's real estate boom was fueled by out-of-state buyers, Wall Street investors, and remote workers. But population growth is slowing, the job market hasn't kept pace, and local wages remain under $60,000. The gap between home prices and household income is unsustainable, signaling a looming correction. Investor activity is collapsing. Institutional landlords who once bought Tampa homes in bulk are now unloading them, often at price cuts. In Hillsborough County, one investor listed 14 homes in the same neighborhood, all discounted to attract buyers. Insurance is another crisis. Tampa sits in a high-risk hurricane zone, and premiums have jumped 70% since 2022. Some coastal homeowners report bills skyrocketing from $6,000 to $17,000 annually after insurers pulled out mid-policy. Add in 15% property tax hikes, overcrowded schools, and strained infrastructure, and Tampa feels more bubble than boom. In 2025, Tampa may still look like a growth market, but the fine print says Florida's #1 real estate time bomb. Number 3. Naples. Naples may look like the picture of luxury: Maserati dealerships, upscale shopping, and more Whole Foods than gas stations. But the real estate market tells a different story. Beneath the palm trees and gated communities, home prices are slipping fast. The median home price in Naples sits around $750,000 as of 2025, already down 7% from last year, and experts warn more declines are on the way. Naples has always depended heavily on wealthy seasonal buyers: snowbirds, retirees, and cash-rich boomers from across the US and Canada. But with higher mortgage rates, rising insurance premiums, and a shaky stock market, that buyer pool is shrinking. Luxury listings are piling up and sellers are quietly slashing prices just to get offers. Insurance is another blow. Premiums on high-end homes are skyrocketing, with some owners paying $15,000 to $25,000 annually. At the same time, FEMA flood zone expansions are forcing more properties into mandatory flood insurance, adding thousands more to yearly costs. Meanwhile, the median local income is under $65,000, far below what's needed to afford these million-dollar listings. With shrinking demand, overpriced homes, and no strong job market outside tourism and services, Naples real estate in 2025 looks more like a bubble ready to burst than a safe investment. Number 4. Cape Coral. At first glance, Cape Coral looks like a tropical paradise. Endless canals, palm trees, and sunshine. But behind the postcard views, the housing market is unraveling fast. As of mid-2025, the median home price is about $418,000, down nearly 12% from last year, with more declines expected. Cape Coral was one of the hottest destinations during the pandemic buying frenzy, attracting buyers from New York, Ohio, and even Canada. Now, many homeowners are desperate to sell or stuck with properties they can't afford to insure. Home insurance premiums have skyrocketed 102% in just 3 years, and many companies have pulled out entirely, leaving residents scrambling for coverage through Citizens, Florida's insurer of last resort. Meanwhile, builders kept overdeveloping, pushing inventory sky-high while buyer demand dried up. Homes now sit on the market for more than 80 days, double the time just 2 years ago. Adding to the crisis, FEMA is redrawing flood maps, forcing more properties into costly flood insurance zones. Locals call it a ghost canal. Between rising costs, insurance chaos, water quality concerns, and inflated prices, Cape Coral is a risky bet for homebuyers in 2025. Number 5. Northport. Northport looks like a suburb built in fast-forward, endless rows of copy-paste houses, construction dust, and realtors still insisting it's a great time to buy. But the numbers tell a different story. Once one of the fastest-growing housing markets in the U.S., Northport saw prices surge more than 70% between 2020 and 2022. Now, reality has hit hard. Home prices have dropped 11% year over year, listings are sitting for more than 95 days, and inventory is piling up at record levels. The problem? Northport built for growth without building jobs. The local economy doesn't have the infrastructure, income levels, or employment base to sustain pandemic-era prices. With mortgage rates still above 7%, demand has collapsed, leaving spec homes and new builds sitting empty. Insurance has added fuel to the fire. After Hurricane Ian, insurers either pulled out or tripled premiums. Many homeowners now pay rates so high they rival luxury coastal markets. On top of that, FEMA's updated flood maps pushed thousands of homes into high-risk zones requiring expensive flood insurance. Worse, many neighborhoods skipped HOAs during the boom. Now the city is introducing special assessment taxes to cover storm damage, drainage, and road upkeep, surprise costs for frustrated buyers. For 2025, Northport looks like a market drowning in overdevelopment, soaring insurance, and hidden fees. Number 6. Palm Bay. Driving into Palm Bay feels like entering the Great Florida Land Lottery. Empty plots, endless new construction signs, and speculative builders everywhere. At first glance, the median home price of $290,000 looks affordable. But in reality, Palm Bay's housing market is a fragile house of cards. During the pandemic, investors rushed in, buying cheap land and betting on endless growth. But by 2025, the boom has unraveled. Home prices are down nearly 9% year over year, and buyers are vanishing. Why? Palm Bay lacks the foundation to support rapid growth. Infrastructure is limited, job opportunities are scarce, and local schools consistently rank in the bottom third statewide. Yes, Brevard County is home to SpaceX and aerospace jobs, but that hasn't spilled over into Palm Bay. Most residents still face long commutes with little economic upside. Meanwhile, the Florida insurance crisis is hammering homeowners. Premiums in Palm Bay have jumped 68% since 2022, and many new builds now require costly windstorm coverage. Buyers often discover their monthly payments are 30 to 40% higher than expected once insurance is factored in. Even locals admit the market feels unsustainable. Between rising insurance, higher HOA fees, and weak job growth, Palm Bay's real estate market looks overbuilt and underprepared for 2025. Number 7. Ocala. Drive into Ocala and you'll see horse farms, rolling pastures, and wide-open country living. But behind the peaceful scenery, the Ocala housing market is wobbling. Fueled by the pandemic relocation boom, home prices surged more than 60% from 2019 to 2023 as buyers from across the US and Canada flocked in. Now reality is catching up. As of mid-2025, median home prices sit around $290,000, already down nearly 10% in the past year. For a region with limited economic drivers, mostly agriculture, retirees, and horse training, that price tag looks unsustainable. There's no booming job market, no tech industry, and no major financial sector to support long-term growth. With mortgage rates hovering near 7%, demand is drying up. Investors and short-term rental buyers have pulled back sharply, leaving homes sitting on the market longer. Families are also hesitant, as Marion County schools rank among the lowest in Florida. Retirees, once a key buyer group, are now second-guessing the area thanks to surging home and windstorm insurance premiums, which have jumped 60% since 2022. Locals joke that Ocala is Gainesville's weird cousin with too many Dollar Generals. The truth? The hype has faded, listings are overpriced, and the market is quietly deflating. Number 8. Bradenton. Bradenton looks like a coastal dream. Sunny views, charming bungalows, and golf carts cruising around town. But behind the laid-back vibe, the Bradenton housing market is quietly unraveling. Median home prices peaked near $450,000 in 2022. By mid-2025, they've slid to about $405,000, and sales volume has collapsed with year-over-year transactions down more than 30%. Drive through town, and you'll see endless open houses, empty showings, and price-reduced signs everywhere. The problem? Locals can't afford today's prices, and out-of-state buyers from the US and Canada aren't flocking in like they did during the pandemic. Bradenton's economy leans heavily on retirees, seasonal tourism, and short-term rentals, but those pillars are weakening. According to AirDNA, vacation rental occupancy dropped 18% in the past year, slashing investor returns. Then there's the insurance crisis. FEMA flood map changes have pushed thousands of homes into mandatory flood zones, while windstorm coverage costs are exploding. Many Bradenton homeowners now pay $8,000 to $14,000 annually in insurance premiums, in some cases more than their mortgage. Retirees are being forced to sell as fixed incomes can't keep up. On top of that, some HOAs have raised fees by 30% to fund storm prep upgrades. For 2025, Bradenton looks less like a safe coastal haven and more like a market sinking under the weight of insurance costs and declining demand. Number 9. Port Street. Port St Lucie may look like a suburban paradise, rows of cul-de-sacs, vinyl siding, and HOA rules for everything. But beneath the surface, the Florida housing market here is showing major cracks. In 2023, the median home price peaked above $410,000. By mid-2025, prices slipped below $390,000, while listings now sit on the market for nearly 90 days, double the 2022 average. During the pandemic, Port St Lucie became a top Zoom town, attracting remote workers from across the US and Canada searching for affordable homes near the coast. But that demand has collapsed. Local wages haven't kept up, and as companies push employees back to the office, fewer buyers are moving in. The home insurance crisis in Florida is making things worse. Premiums have soared nearly 80% in 3 years, while new FEMA flood maps are forcing more homeowners to purchase expensive flood insurance. Add to that gridlocked traffic, overcrowded schools, and limited healthcare, and the city feels overbuilt and underprepared. Even locals admit Port St. Lucie grew too fast without the infrastructure to support it. With affordability eroding and insurance costs climbing, the city's once red-hot real estate market is now looking dangerously overvalued in 2025. Number 10. Central Florida's CMI market. At first glance, CMI feels like a Disney suburb. Pastel homes, themed decor, and vacation rentals on every block. But beneath the surface, it's one of the most oversaturated housing markets in Florida. During the pandemic boom, median home prices soared to nearly $430,000 in 2022. By mid-2025, they've fallen below $390,000, with further declines expected. The problem? CMI bet everything on short-term rentals and Airbnb properties instead of stable, year-round residents. Thousands of homes were built for tourists, not locals. But now, travelers have cheaper options abroad, and occupancy rates for vacation homes in the area have dropped 21% in the past year. That leaves investors stuck with high costs and empty properties. Expenses are crushing. Many resort-style communities charge $600 to $1,200 a month in HOA fees for shared pools, gated entries, and mandatory maintenance. Insurance is even worse. Osceola County has seen some of the steepest hikes in Florida, with annual premiums hitting $10,000 or more for vacation homes. Several insurers have stopped writing new policies altogether. Local affordability is another crisis. With a median income around $51,000, most residents can't buy here. The result is a ghost town of investor-owned homes, underwater mortgages, and rising foreclosures. In 2025, CMI is less a retirement dream and more a cautionary tale of Florida's short-term rental bubble bursting. At the end of the day, these aren't just minor dips in the Florida housing market. They're slow-motion collapses hidden behind palm trees, glossy brochures, and Zillow listings. If you're thinking about buying in 2025, remember, the biggest investment you can make isn't just in property, it's in making smart, informed decisions that protect your future. So here's my question for you. If you had $400,000 to invest right now, would you risk it in one of these Florida markets, or would you look elsewhere for safer growth? Drop your answer in the comments. I'd love to hear your strategy. And if this video saved you from a costly mistake, do me a favor. Hit that like button, subscribe for more housing market breakdowns, and share this with someone who needs to hear it. Together, we can outsmart the bubble before it bursts.